All right, here we are. Episode. I have no clue what episode this is. I'm not even this far into the mentorship, and I already forgot what episode it was. What is this episode? Oh yeah, episode 4. Okay, episode 4. We're talking about equilibrium today, or in this episode, whichever day you're watching this. Say today, because you might watch one episode a day. But in this episode, episode 4, we're going over equilibrium. Okay. In the last episode, I taught you about premium and discount when it comes to dealing ranges. And well, that's really the only thing you can put premium and discount on, which is dealing ranges. So, equilibrium, okay? We're going to be talking about the equilibrium of dealing ranges because it's a very big thing. Now, remember how I talked about in I think, the second episode, after the introduction, about liquidity? Now, one out of the 3 rules is that price is always going to be seeking liquidity, okay? In this episode, I'm going over the second rule, okay? The second rule is price is always going to look to rebalance or retrace. Rebalance or retrace is the same exact thing. Or retrace, I'll use retrace because you're a beginner, you're just now starting. But retrace into the equilibrium or the midpoint right here of the dealing range that you draw from. Okay, price is always going to be coming back to this point because this is like its resting point. This is like okay, we're finally done. It's like oh man, it's time to calm down. That's what that point is. Whenever you see price come down here, it's like okay, finally, are we done? Like, come on, are we done moving now? That's what the equilibrium is. Whenever it comes to meet this point, after a large move, after a dealing range has been created, it's like, okay, we can take a break. Are we done? That's what that is, okay? So let's look at this dealing range here and see how it formed. This entire thing here is a dealing range, okay? So before this big displacement or this big move up, we had price take out these lows here, okay? What was the last or the deepest swing that price created after those lows were taken? It was this one. This was the deepest swing. So from this swing, okay, we're going to let that rest for a little bit, all the way to the final highest swing before it finally rested. It's that one there. That's the final swing. Okay. So boom, down to that last deepest swing after those lows are formed. And then boom, to the last or the highest swing after highs were taken. That's the swing here. So swing low to swing high, boom, there's a dealing range, okay? Like I said, after a large move that creates a dealing range, you want to expect price to be traced back into the equilibrium or the midpoint of the dealing range or the equilibrium of the dealing range, okay? I'm gonna say that again. When price has a energetic move creating a dealing range, after the energetic move, you want to see price come into the equilibrium or the midpoint of the dealing range to take a break or to either head higher in the future. Now, let's draw this out, shall we? Boom. Bam. All right, now you probably already see it. I know you see it. You see it, don't you? We're in dealing range, right? This is the equilibrium right here. Let's say we want to see price come to the equilibrium, respect the equilibrium. Whenever you hear the word respect when it comes to price action, that means price is like bouncing off of something. Okay, it's like price is like, okay, let's use this. That's what respect means, because you see how it respects the equilibrium. I'm sure you don't have to go in depth about it, but respect is basically like when it's rejecting off of a certain level. Okay, so this is respect of a confluence or respect of a level in price action. That's what that is. This is respect. It respects the equilibrium. And let's say we're looking for longs, or we're looking for buys, or we're bullish for the rest of the week after the equilibrium touch, right, or the respect of the equilibrium. It goes higher. It does. Okay. So you can use the equilibrium as a expectation for price to go higher if it respects it. Okay, because if it respects it, that's an indication that it wants to go higher. Okay. Or if it comes below it, you can see it dig into a discount, into some sort of confluence. And remember, you'll learn about the confluences later. Okay, I'm just showing you the blueprint of what you can do when you do learn those confluences. But equilibrium can be used for 2 things, right? An expectation to retrace into it first. That's the first and main thing. You want to always expect price to retrace it to equilibrium before heading higher, because it's going to do that. That's the second rule of price action. It's the second rule. it has to retrace into an equilibrium before heading in a certain direction. Okay, or we want to see a continuation, it has to respect the equilibrium or come down into it and then head higher. Did it head higher? Yes, it did. Okay, or if we want to see it go higher, you can see it come below the equilibrium and then come back up, because it didn't go too much below it, but it could have went a little bit lower, probably like down there, and then headed back up, and then went back up like that. But it didn't do that, did it? No, it didn't. So equilibrium is a very big thing when it comes to price action. Price always has to retrace to an equilibrium before going in a certain direction. Okay, it has to, and it's going to do that. Sometimes it won't always do that because there's other confluences that tell you why it won't do that. There will be confluences that tell you that, but other than that, most of the time, price is going to retrace to an equilibrium before going up. That's just common knowledge when it comes to trading ICT. Very, very common knowledge. Okay, but even here, right? If we zoom in on here, before that dealing range was created, don't worry about the drawings either, because these are my drawings that I have to analyze price live whenever I'm in my Discord server. But anyways, this high right here, we have this high and this low. Okay, price takes out the high. Whoop. That highest swing after the high has been created, that's the highest swing. Or after the high was purged or taken out. High was taken out, that's the highest swing after the high was taken out. Okay. Price splurges down into that low. Okay. What's the deepest swing low that was formed after this low? Was it this one right here or this one? Let's zoom in so you can see. Which one was it? Was this the deepest swing low or was this the deepest swing low? Which one was the deepest? The one further in depth. It was this one. Okay. So from here to the last swing, that's your dealing range. Okay. Like I said, before price goes any further in any direction after an energetic move has occurred, creating a dealing range, you want to see price come back into equilibrium before heading any further. Does it do that? Yes, it does. Does it right on too. Meanders around in the equilibrium, showing that it wants to go off of it. Whenever you see price meandering around off of a certain confluence, or start accumulating or consolidating or meandering or respecting a certain confluence, that shows that it's respecting it. That shows whenever you see something like this, it comes straight up to the confluence and then just accumulates or consolidates or meanders around it, that's showing that it wants to, reject off of it. Does it do that? It does. It does do that. It does. Very simple concept, right? I think so. I think it's pretty simple. Let's do another one, because why not? Let's do another one. All right, here we go. So I'm sure you probably already see it. I'm not even gonna explain it this. I'm not gonna explain it. We're gonna hide this real quick, just to make it easier. I'm not even gonna explain it, okay? This is the highest high, the highest swing high, to the lowest swing low. Well, really, this is the lowest swing low here, to the lowest swing low. Price comes into the equilibrium. And what does it do? What does it do there? Comes into the equilibrium and dumps lower. Isn't that amazing? That's true. That's truly amazing, isn't it? I think so. Am I using the wrong microphone? Wait a second. Technical error. Let's see what's going on here. It tells me using the wrong microphone. We're gonna see. Human error, guys. Let's see what's going on. Nope. It says it's working perfectly fine. Anyways. But that's equilibrium. Very, very simple concept. Nothing hard. Just seeing what happens with the equilibrium, okay? Price, like I said, it's a rule. It's one of the rules of price action. It has to come into an equilibrium before going any lower. And if it doesn't, there might be some sort of confluence that's telling us it wants to, move further in a certain direction. You will learn about confluences later, okay? Alright? Okay, cool. Don't want to confuse your tiny little brain. Okay, don't want to confuse it, because you're just now getting into this. Let's not confuse that little brain of yours. Alright, right here. So, we got this high right here. Boom. So we got that low there. Boom. Price takes out the low. This is the lowest swing low. after that low was taken out. Take it from the low. Price took out that high. The highest swing high after that high was taken is right here. Boom. You drag it out. I can even do so. Price comes into an equilibrium, right? It respects the equilibrium. And boom. And boom. Yeah, it's amazing, isn't it? And boom. And boom. It's pretty cool, isn't it? It really is cool, if I say so myself. It's pretty darn cool. Oh boy, I'm going crazy just looking at this now, and I've been trading this for 2 years, man. But still going over this and reteaching it is an amazing thing to see in hindsight, man. Jesus Christ. Oh boy. Just using other confluences, this would have been an amazing trade, but obviously I didn't catch this. This was on a Tuesday in July. I wasn't trading Euro at that time. I just now started hopping onto Euro. But anyways, I think that's enough for this episode, for episode 4. But yeah, like I said, for the same thing, same homework for the last episode. I might start giving homework for every episode too. But for this episode's homework, same thing. Go draw dealing ranges and look at the equilibrium. Instead of just drawing the dealing ranges, practicing them. Practice drawing the dealing ranges, yeah. But look at the equilibrium. Just pay attention to it. Pay attention to what it does. Okay? That's your homework. I'll be in this episode here, and I'll see you on the next episode. Peace.